Hello, traders. This is your trader's friend. Thank you for joining me for another video. I'm so glad you could be here with me. Today, I would like to talk to you about entries in the market. I am still using the 1 minute time frame. I've just kind of fallen in love with that, and this is where we are. This is the Euro USD 1 minute, and this is where we are currently in the market. And I just want you to pay attention to the crinkliness of the moving averages and the distance in your moving averages. So keep those things in mind. This isn't the best entry, so I wanted to start off with this one. Now, some of this price action I've blown up so that you can see this a little more clearly. Look at this entry. Now, all of your smaller moving averages, they're right here together. You see how they're kind of crinkly without much smoothness, and you can see the distance between the smaller moving averages and the 50 period. Now this is a valid break of that 50 period, but look at what happens with that. You end up in this long period of about 58 minutes of consolidation here. Now notice just about an hour later, same trade. Look at the smoothness in the moving averages. Look how that's just flowing, and look at the distance between the moving averages. So instead of finding yourself in, and also look at the distance between the 50 and the 200 period. And another thing that, let's see, this is at 126.88, and this is at 126.62. Now here it is at, yeah, okay, 126.92, and here it is at 126.72. So you have a closer distance here, but you also have more of a smoothness in the moving average. Now, the difference between entering here and here is the amount of profit that you get, and you can see the difference in the profits there as opposed to the profits from the entry here, and you don't have to wait quite as long. So please do pay attention to your entry. And another thing, you want your 50 period to be closer to your smaller moving averages than it is to your 200 period. Just wanted to point that out. Exact same trade, period of consolidation, but I wanted to, this is a kind of nitpicky point, but I want to show it to you. Let me blow it up. Okay, I want to point out why it is that this is a better trade than this, and it's simply because of the way your moving averages are. Here, your 50 period is acting more as a resistance level. So once it comes here and undergirds price, once price demolishes all that, that means that price has squashed that support, making this a much better entry than that. Just wanted to point it out. I know it's nitpicking. Okay, another entry. When I look to enter a market, I can pretty much tell about the amount of pips that I get by, again, the way the moving averages are corresponding to one another, the distance between the 50 period and the other moving average, and the 50 period and the 200. Another good trade setup. Okay, trade setups that make sense. Let me tell you, price is going to do what price is going to do, period. Moving averages are going to follow your price, but they are calculating price movement over a particular period of time, and that's where the advantage comes. And this is the hardest thing that you're going to have to do in the market. The hardest thing that you have to do is wait for a proper trade setup, the trade that's going to give you the biggest advantage, number one. The second thing is cutting your losses quickly. If you see that you're in profit, and as of late I've been noticing that you get into a nice profit and you consolidate for a while, you can ride that out. That's totally up to you. But those are the two hardest things that you're going to have to do in the market. Okay, look at these entries. They don't make for very good trade setup. Look at the crinkliness of your moving average. Smoother moving average, nicer trade. And also pay attention to that distance, is so important. Now, why isn't this the best trade? It has everything to do with the location of your larger moving averages. And also look at the crinkliness of the smaller moving averages as well. Nicer trade setup. Not the best trade setup, but you can get some nice pips out of this. And guys, I want to point out another thing. Another thing that gives you a tremendous advantage in the market is the time that you choose to get into the market. That's another thing. There's nothing magical about moving averages. Like I said, moving averages are following your price action, but waiting for the proper trade setup does give you a tremendous advantage over other traders. Nice trade. Look at the moving averages. Look how wonderfully that trade is flowing. Look at the closeness of the 50 period to the other ones and the 200 period. Guys, I'm going to, and let me show you how nicely this trade continues to bleed to the downside. Very, 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 very lucrative trade. Okay, this pair, and I just wanted to show you a nice upside trade. I'm actually in this trade currently to the downside and I'm in profit, but um, this pair, this is the Euro GBP, and it, look at that beautiful trade. And this is the thing. Again, look at the closeness of those moving averages, the 50 period. So this makes for a nice trade to the upside. Beautiful upside trade. And you can, let's just take this 200 period off for a minute. Look at that. That's a fantastic trade. And again, look at these moving averages. Okay. So by the time price crosses this good, look at the closeness of that moving average, and then you see you have a nice, beautiful trade to the upside. Okay, and again, this is pretty much how I determine whether or not I want to get into a trade, and look at where the 50 period is as opposed to right here, which makes this a much better trade. Guys, if you will, and I don't mean to be cocky in saying this, I'd like to give you an assignment if I can. And my assignment to you over the weekend is to go back in your chart. If you use moving averages, use your moving averages to see which trade setups are better based on the distance of the moving averages, which ones are worse, and make yourself some notes. Go over your notes. Guys, the advantage comes in being able to recognize price movement in the right now. Everything I'm showing you is past price movement, so of course it worked out perfectly. But the advantage that you need when you're trading against me and against, and I'm not saying that I'm a super pro, but against those guys who just live this stuff, is in the studying of your past chart and being able to recognize where price is likely to go and being able to recognize the right now advantage. Guys, you can absolutely do this. You can be successful at Forex. Have a terrific trading week.